This meeting is being recorded.
Good morning, good evening, good afternoon, whenever you are. This is another webinar from the series Become cTrader Master. This is part 10, and we are going to talk about the calendar, how to use the calendar in the everyday trading, using, of course, most preferably the cTrader platform from TopFX. What do we have here? As you possibly know, let me just switch to the full screen. What you probably know is that we are using the cTrader platform as the best trading platform for really different markets. It can be metals, it can be forex pairs, major and minors, and it can be even cryptocurrencies and the other stocks, the European or Asia Pacific shares. It doesn't actually matters. This platform can trade everything. So there is a particular, very important part of the trading, of the forex trading, basically, which is very, very closely involved with the data and the research. So what I'm talking about, most probably you know about it, is of course the economic calendar. Where can we find the economic calendar on the cTrader? Well, you can find it here. If you click on the calendar, as you can see, there is a very special window just below that section here, and it says no events, right, for the euro dollar. Of course, this is the euro dollar. This is what we are trading right now. We can change the market. For example, let's change the market to the New Zealand dollar for today, and as you can see, there is no events. So let's change the time frame. Maybe we should change the time frame for weekly. Let's try the weekly. And as soon as we trade, as soon as we change the time frame to weekly, you can see that of course the chart was they changed the appearance as well. Let's find out there's something on the euro dollar. As you can see, we don't have too many events on the calendar. Let's find out here. And there is something completely different for today. When we're using the calendar issue. So for this symbol, of course, right now there is no event, right? This is the current hour and the current, the present time on the market. There is no event for the euro dollar. If we switch the menu to the calendar menu here, you can see easily that we are trying to find some kind of events for the euro dollar for today. Maybe let's take a look at tomorrow. It might be much more interesting. So let's just leave this panel like that, and let's make ourselves a little bit much more familiar about the economic calendar. What is that economic calendar and what is news trading? Well, an economic calendar allows you to plan your trading strategy by learning which events are due for release in the coming days, in the coming weeks, and even in the coming hours or minutes. You can also get the latest data on the crucial economic announcements which can potentially impact the financial markets. For example, this include the US non-farm payrolls, of course, the interest rate announcements by central banks, inflation numbers, manufacturing figures, GDP, and much, much more. So the question remains, of course, how to use this economic calendar. So let me just show you here what kind of features the economic calendar has in the cTrader. The first thing is that, as you can see, we got this flag here for the event which is called consumer confidence from and this is Ireland. Okay, the consumer confidence from Ireland is scheduled for release in 6 hours. That's the exact time, but it will this clock will automatically adjust to your time zone. So in 6 hours, we have data from the Ireland that will affect the euro mostly. That should affect the euro mostly. Let me say like that. Of course, we got the impact. So how big will be the impact of this data release on the markets? As you can see, low impact. What was the actual? What will be the actual reading, and what was the consensus? Will be provided soon, and the recent number was 48.7, so that's the previous number. Sometimes the consensus is already on the screen, right? So it's already appeared, and as you can see here, unemployment survey, which is due in 13 hours from Spain, will mostly affect euro, and the previous readings was 12.76% unemployment in the Spain. The consensus is a little bit lower, 12.5%. Apparently, what will be the actual number? We're gonna find out in 13 hours. The impact on this event on the financial market, as you can see, is low as well. So sometimes you can find the consensus, sometimes you can find almost always, excuse me, you can find the previous numbers, but let's take a look here. For example, what do we have here? The gross domestic product annualized from the US will mostly affect US dollar, and it's scheduled for release in 19 hours. And this is high impact event, right? The previous gross domestic product was 3.2%, and this time the market participants expect 2.6%. The consensus of the market participants is 2.6%. So let's just stop a little bit here for a moment and find out what is exactly going on this little feature here. This event, if you click on it, this event will be much more explained, right? Including the definition of the gross domestic product, how it's affects the markets, and the reason for that is sometimes the market volatility will be increased because the market was disappointed by the figures, or the market was surprised by the released figures or released data. What do I mean by that? The first thing is, as you can see, that the previous reading of the gross domestic product in the US was 3.2%. So the market participants might feel surprised if the actual number will be 4%. Why? Because they expect the 2.6% figure. Okay, so that will be positive surprise if the actual number will be 4%. On the other hand, the market participants will be disappointed if the gross domestic product from the US will be below 2.6%. That means it's even lower than the consensus is. And of course, both of this situation will have different impact on the price behavior of euro dollar, because this is what we are looking at. The third situation is that the market data in form of example gross domestic product are in line with the expectations, and expectations is 2.6%. Okay, not the previous reading, but 2.6%. This is the consensus. So if the actual number is 2.6%, then traders say, well, the data were in line with the expectations, and the volatility on the euro dollar, for example, might not be that big because there is no surprise and there is no disappointment. So please be very, very aware of the fact that the market volatility will be directly dependent on the market being surprised or disappointed of the released data. In our situation, this is of course gross domestic product. So with this example, you can of course build the whole strategy for it, but the first thing that you can use the economic calendar and of course for this particular event, to be more specific, is to research the markets. Why? Well, whether you have a position open within one specific sector or one specific forex pair or variety of pairs or sectors, including, as I said, I don't know, forex, commodities, and stocks, it is important that you know what is going on within the financial markets. So research the market, do your own research, of course, and the forex calendar might help you find out exactly what time and what event is important for your for your strategy and for the overall market behavior, because it's based on the general economy, right? The other thing is that you basically can learn a little bit more about economic indicators using the calendar. These are macroeconomics events that can be used to analyze the performance of a country, of course, such as, for example, GDP, gross domestic product, in our situation, annualized. So this is for the whole year, gross domestic product of the US for the whole year, right? It can be CPI, consumer price index. It can be PPI levels, producer price index, and of course the unemployment rate. So you can gain much more economic knowledge by learning about the economic indicators like gross domestic product or, for example, unemployment rates, and how it is related to the behavior of particular currency. It, of course, depends on what kind of market you are following. In our situation, we are following euro dollar, for example. So the gross domestic product will most likely affect the US dollar, right? Because it's data released directly from the US, and this is very, very important event because it has a high impact on the financial markets. What else you can do with the forex calendar? You can compare data. You can compare both current and historical data of over, I don't know how many countries it is. I guess it would be much more than 20 countries or even more, and other financial markets, of course, with this global view and this global, of course, settings. For example, we are looking right now for tomorrow. We are preparing for the tomorrow session, for the London session or for the New York session or for the Asian session. It doesn't actually matters. However, the most important sessions are London session and the New York session, and the overlap session between London and New York, of course. What else? What else you can? How else you can use the economic calendar? You can keep up to date with the news releases. Of course, you have to be on the top of the things. You have to keep up. You have to catch up with things are being released, data will being released, events that are being released to the markets because they affect the price behavior. You can trade on the news during news release and economic announcements. And this is kind of a vital aspect of a fundamental analysis. You need to consider this situation as well. It's just as important as technical analysis and studying price charts. So you're not only looking at the weekly candlestick price chart of the euro dollar, you are also learning about the data, economic data, and those data are part of the fundamental analysis. Gross domestic product annualized is definitely a part of the fundamental analysis used in the forex, used by the traders in the forex environment, right? Of course, this is the gross domestic product for the USA. What else you can do with the forex calendar? You can build an event-driven trading strategy. Yes, you can build a trading strategy that can help you to take advantage of the temporary mispricings and the changes in an asset price. So what I'm talking about is, of course, very, very violent and aggressive and dynamic and quickly changing trading environment during the data release. The best example that you can see on the market is, of course, the non-farm payrolls data release, which is scheduled for release every Friday at every first Friday of the month. The market moves very rapidly, very dynamically during this data release because they have, of course, the high impact on the market, and there are traders who use this opportunity to trade by using the event-driven trading strategy. You can customize your calendar. You can choose how much data you want to see, and once at once you can choose how much data you can see at once and how the data is displayed. Okay, so that's another thing. For example, you want to see only the very, very important event, high impact event. Yes, so you don't want to see any sort of the low impact event because you are not particularly interested that much in this kind of event, or your strategy doesn't actually cares about this kind of a low impact event. So you, of course, you can visually straight on identify the high impact releases like non-defense capital goods orders in aircraft and durable goods orders. Both of them are from the US dollar because they are related to the euro dollar crypto currency pair. Another pair, for example, let's take a look at cable, which is, of course, the British pound to American dollar. And as you can see, for tomorrow, we don't have too many events that will affect the British pound. Let's find out. Maybe there was some, maybe next week. Okay, next week, let's take a look at the next week. There you go. We have the Bank of England Governor Bailey's speech. We have the unemployment rate, and we have some climate count change. Both of these events will definitely impact the British pound. Okay, that's data from the for the previous weeks. The other thing is that you can set up trading alerts. What do you need to do is to go to the next week, or you can even go like we did to the next day, to tomorrow. And then, of course, you can place kind of a alert on the chart, right? Price alert when price will reach a certain level. Let's find out the euro dollar gross domestic product event once again. So this is the gross domestic product annualized. There you go, and let's just put it here on the top. And what I mean by placing the alerts is that you, of course, might use this opportunity to be informed straight on if price will break above or below any level that is important to you. It doesn't matter if this is the technical resistance, or if this is a technical support, if this is a moving average, if this is like Fibonacci level or retracement level or projection level. It doesn't matter. You can set this kind of a alert, price alert, straight on the chart, and the price will be, and this alert will be sent to your email account, and it will be displayed on this area here, this top right corner, upper right corner. So how do you do this? The easiest way to do it is to click on the screen, in the middle of the screen, somewhere in the chart area, and then you have straight on predefined levels for the price alert for bid bigger than 1.0972 or for ask bigger than 1.9772. So if you click, for example, here for the ask, because this is for some reason very important level for you, then it's being placed. If you want to move it up and down, you go with your mouse here and you move it whenever you want. For example, we are looking for this low. Let's say this low here, this big red candle. The low is here. If the market will break this level, please alert me, because I would like to know that this level had been violated. This level is 1.0479 pips. So this is how you set the price alert, and if during the news event this level is hit for any reason, you will be notified that something like this happens. And you can of course use your trading strategy to make this event tradable for your strategy, basically, right? So that's another thing. That's another let's say example of how can you use the event calendar or the forex calendar. It depends. It doesn't actually matter how you call it. So please remember, the first thing is that you can identify high impact events on the calendar affecting particular market, right? You can of course be prepared by placing the price alerts on the chart. Okay, so that's another thing, to adjust your strategy or to basically start your strategy or terminate your strategy, okay, and wait for a different trading setup. You can learn more about the economy, about the underlying economy and the underlying fundamentals of, for example, gross domestic product, in order to better understand the mechanisms behind the price movement. And especially I'm talking about the economic and fundamental mechanism, because all of this kind of data are being interconnected and influence each other. And of course you can use the economic calendar to identify high volatility periods of time when one of your strategies, for example, day trading strategy or scalping strategy, might be useful. Okay, so plenty of things here, if you think about it, regarding to the forex calendar. Plenty of interesting examples of how to use the forex calendar. It doesn't look impressive, this tool, but believe me, this can be one of the biggest and very, very often under not that sophisticated tool in your trading arsenal, that you were not really keen to use in your trading, in your daily trading activities. But it's not a mistake. It's not something, it doesn't mean that you're doing something wrong. You basically need to educate yourself a little bit better, a little bit more, in order to make much more sense out of the market movements in various or in the specific hours, right? So please remember, London trading session, New York trading session, and Asian trading session. So this is how you use the trading the calendar, the economic calendar in everyday trading, during your trading activities. And I hope this webinar was a little bit more explanatory and informative for you. Of course, for the beginners traders, I guess that the beginners are pretty much a little bit confused and overwhelmed with the all of these indicators and charts and leverages and different markets and all of this information coming to you every day, every hour, every minute. So I hope that this was a little bit informative for you guys, and you will find it basically helpful in your trading on the financial markets. Thank you very much for watching this webinar. This is how you use the forex calendar, the economic calendar, in everyday trading. I hope we'll see each other once again on next part of Become cTrader Master, free webinars by TopFX. Thank you very much for your attendance. Thank you very much for watching this webinar. Hope to speak to you guys soon. Take care and bye-bye.